Hi guys, thanks for tuning in to another episode of Nuggets News. Well, another huge week with Bitcoin up 5%, Binance and Monero, the other good performers there. We've got a lot of geopolitical headlines to get through as well as the crypto news. We do welcome a few hundred new subscribers, and if you are new, recently I've started tying in that crypto news with the macro news because there's simply too much overlap to ignore. We do welcome 14 new members to our premium area, and today I went over my portfolio in great detail, percentages and how I see altcoins playing out in the future. Big thanks to our sponsor, New Brighton Capital. We have got dozens of you guys that have used their service now to set up your self-managed super with a bit of crypto for the long term, or just take advantage of that free 20-minute consultation to see if it's for you or not. They'll help you with all your reporting obligations, and we do have that discount code there down the bottom. I know plenty of you guys have watched the interviews we've done with Mike from New Brighton Capital, and we're happy to support great Aussie businesses, and thank you for them supporting us. So into the local news here. Where's the outrage? There's a bigger problem than a lame inquiry into Crown. A little bit like the Royal Commission. We have these inquiries, a bit of a slap on the wrist, and nothing really comes of it. And why aren't people a little bit more outraged? Well, I think a lot of people aren't really interested in this sort of news, but this theme seems to be flowing through a lot of politics in Australia at the moment. We recently reported on the collapse in the housing sector, construction, and the flow-on effects from other businesses. And this is a new accounting loophole. So let me know if you're familiar with this. Reverse factoring and trying to push debts and payments off the books otherwhere. This just shows me that everything in the world of finance is just becoming smoke and mirrors recently. It really is crazy to think what's going on behind the scenes. And again, this interview came out, leaks from NAB's top executives saying that even during the Royal Commission, they were still pushing products on people that they knew couldn't afford it. It was going to come back to haunt them. So it's unreal watching this all come to the surface. And it didn't surprise me when Ken Hayne came out this week and said that trust in institutions has been destroyed. So scathing attack on modern politics. And if you're a subscriber to this channel, you probably agree. You couldn't agree more with what's happening in Australia. Now, at the other end of the spectrum, something that's frustrating me about the economy and the documentary we did was not investing in innovation and encouraging that. So Australia is not ranking at all in terms of the amount of money we spend on research and development. I think we're down somewhere near 1.8% compared to all these other countries. So love to see more money go in and support innovation. We did do our deep dive into the economy with Martin North, but gold hitting 2,250 an ounce in Australia and Bitcoin hitting 19,850. I think a lot of people are only just waking up to this. Our message has been to buy gold and Bitcoin for years and years now, and more people are now asking me, hey, how do I do that? How do I get exposure? And I have done plenty of videos on that. Over to Europe, where a Danish bank is offering mortgages at minus 0.5%. So the headline here says basically paying people to borrow money, and people still laugh when I talk about negative mortgages, saying it'll never happen. Now, with the other fees, you still end up paying something. They're not, effectively paying you, but as interest rates creep lower and lower, it is going to get to that stage. So just like we have interest rates in Australia currently at 1%, your mortgage rate is still 3 or 4. So it's a little bit higher than that rate. But if we do have a recession and go to -3, -4%, you are going to be in that situation where hopefully your mortgage rate goes negative. Now, some people say, well, that's going to be great. Now, what's going to be happening around us at that time is going to be a recession and pretty nasty with job losses. So we don't, wish for that necessarily to happen. Now, over to Brexit, where Boris has taken over and he's promising that this Brexit is going to take place. But the UK economy is now shrinking for the first time since 2012. This is something that I think can affect Bitcoin. We're seeing local Bitcoin's volumes tick up a little bit. So keep an eye on this if things get nasty in the coming weeks. Sorry, you guys can't see that there. You can check out the volumes on local Bitcoins there on CoinDance. And also other apps. There's so many on-ramps. During the last recession and Occupy Wall Street, we didn't have all these apps where people can choose to vote with their money, their value into these apps like Robinhood that's now launching in the UK as well, pending that approval. Now, we have to remember the flow-on effects to the developing nations who are the manufacturers of the world these days. They produce everything. We've been talking about Carmageddon. So another 200,000 job losses in India, up to 1 million at risk. And you see how quickly this grew. And if the world slows down and we're not going to keep going into debt and buying new cars and getting these leases, then this is all going to slow down and really hurt those economies, particularly the ones that are indebted to the US. Now, over in China, similar situation to what I just explained then, but another bank on the brink of collapse here. So China's big four banks are all sinking to their lowest valuations. We know, the European banks are really, really struggling near their record lows. And Kyle Bass summed it up perfectly here, where this is the third bank bailout. Literally the last 3 weeks in a row, we've reported about these banks with hundreds of billions of dollars in assets just been nationalized. The government steps in and saves them. This is a mini GFC happening in China, and we spoke about how this is going to affect iron ore prices in Australia, and that is all playing out currently as well. Another thing to watch was the peg. I spoke about this in an emergency video on Monday night, and if you took this advice and had this on your charts, the USD CNY in orange here, this was a perfect correlation and predictor for Bitcoin price movements, and it's continued higher later on in the week as well. So something I'd encourage all you traders to have on your charts. Now, China did come out and say that they're ready after 5 years of development to issue this digital central bank currency. So is this going to be another weapon to bypass sanctions we've seen in other countries, get around the trade war? What a time to be alive. You can't make this stuff up. Now, China confirmed that they're going to push back against Trump and his tariffs by suspending agricultural product purchases. Tit for tat here, Donald Trump taking to Twitter. He's talking about the Fed and how the strength of the US dollar is hurting their local best companies, the John Deere's, the manufacturers there. So he's going to continue to call out the Federal Reserve, and we wait to see what their next move is after they said, look, things are pretty good. We're not necessarily going to cut again anytime soon. So what Donald Trump did was effectively label China a currency manipulator for the first time in 25 years. So look, China have really just stopped defending their peg, a floating currency. It's not really manipulating their currency, particularly when you consider what the US did with QE and low rates for 10 years. But if China does it, he's calling it manipulation. So sure enough, it was a pretty rocky week on stock markets, particularly the NASDAQ, these highly valued tech stocks. We know that there's the back and forth there with Huawei and the licenses. And one that we covered last week was Beyond Meat being overvalued. It reminded me of a crypto, so I wanted to do a video about that, and sure enough, it's fallen from 240 down to 160 there. Maybe still a long way to go. Now, this was an interesting story about the makeup of ETFs. So the SPY is the world's largest ETF. It tracks the S&P 500. And these guys did a bit of research, and this was actually originally a trust fund set up for 11 millennials that didn't necessarily know each other. And it's just grown and grown and grown, become a really popular investing product. And this just demonstrated to me how sometimes we're not even aware of what makes up these ETFs or who founded them. And if these 11 people die, theoretically, this trust fund could go to them, and the S&P 500 ETF would dissolve. Who knows if that is likely to happen or not, but certainly an interesting story that I thought was worth checking out. Now, America's largest pension funds are missing their targets. We know that these funds, pension funds, retirement funds, have to target returns of around 7% if there's any hope of paying out people's retirement and those pensions. So they continue to miss these at a time when bond rates are returning negative. It's so hard to find high returns, and that's why we see all this money going to the stock market, but at a time when it's at record highs. So if we get a downturn, this is going to be even worse again. Now, US credit card interest rates are at their highest level in 25 years, even though interest rates are relatively low. So this is a great example, and it's the same story in Australia here. Interest rates are 1%, but you're probably still paying 14% on your credit card. So banks are trying to keep those huge margins to make plenty of money. And remember, consumers are in a lot of debt. So these high interest rates, once you get behind on your debt, it's so hard to ever get in front again. So 6 charts showing how the American middle class is drowning in debt. This was probably the best one I wanted to show you just last down here. So debt versus assets. And yes, the bottom 90% have been slowly growing their assets, but look how much debt they've had to take on to do so versus the wealthy. So yes, they've still got some debt, but relative, look at the percentages here. They've just had their assets go up in value. And this is that inequality effect, QE money printing. It flows to the wealthy and it doesn't make its way into the real economy. Final story here is the declining yields and despite a rate cut. So basically when the Fed cuts rates, bond rates generally go down, less people will want a bond if it has a lower yield. But there's only been a few times in history when the Fed have cut rates and yet the 10-year yield has plunged, meaning more people wanted to buy that, to get in. So what is that telling us? Is there another big event around the corner? I'm not sure. Let me know what you guys think below. Now, I wanted to just throw this in here as well. Donald Trump just retweeted this, this Jeffrey Epstein suicide that's just breaking news at the moment, and the Clinton body count, if you're familiar with this story. But look, I'm not going to give an opinion on what's happening here other than to say that when Donald Trump is tweeting stuff like this and tweeting at the China and the Fed, anything like this is going to upset markets. They don't like uncertainty, so just be cautious out there. Now we're into the official crypto news segment, and the Fed are launching their own payment tool. So, is this a threat to the banks? Not crypto. I did my deep dive into Ripple as well, which I really enjoyed having Sam on. So I know plenty of you have checked that out. But with all these stable coins, payment coins, I certainly think it is a little bit of competition for each other. And we're waiting to see who gains traction first. The other thing that banks have got a lot of competition from with those record low interest rates are all these lenders. So look, Dharma has postponed accepting new deposits and loans at the moment. And I think they were subsidizing a lot because there were relatively high yields and they were, pitching in to attract more customers. Now you can't keep doing that forever, and maybe that model is broken. So look, if you did get in, you're earning those high rewards. I think that is likely to compress down to 7%, 6%, maybe 5% annually, because people are going to become familiar with this technology. And when you're getting nothing in your bank, if you can get that yield safely over a year, a lot of people are going to start using these products. Now, one of the things that I did learn about during that XRP interview was the tipping service and microtransactions, which I think is great. And Brave continues to expand. So only last week we reported that they've integrated into Twitter and now integrating into Reddit. So a great little project that I really love, and I recommend you check out the Brave browser. The next bit of news here was VeChain and teaming up with Penfolds, Australia's most famous wine brand, to use these near-field communication tags, these little chips. You can tell if something's been tampered with. Awesome to see this technology actually being used in the real world by an Australian company. Now, IOTA have launched some grants, so $5 million there. They want to help speed up this research, removing the quarter node, quarter side as they're calling it. This is the pivot point. This is the most important thing for IOTA to sort out for their technology to win in this battle for the Internet of Things space. Augur is another project I've been really passionate about. Prediction markets, they continue to bring out better versions, so faster oracles. We've spoken about it. Chainlink's been in the news. Oracle's so important for getting that information from the real world into the blockchain world. Faster settlement for resolution. So Augur has actually been integrated into Twitter. I want to see this expand and get the really friendly user interfaces so I can make more and more bets and prediction markets straight from my Ethereum wallets. Now into the exchange news, and Binance actually went up despite that KYC leak. So a bit of back and forth. I'm trying to get CZ on for an interview. We're just trying to agree to the questions because I want to ask some hard-hitting questions. And look, I think this is actually pretty bad. The fact that there's a lot of people's photos and information out there and they're saying it doesn't have their watermark. So either way, these hacks and leaks, not good for anyone, but Binance Coin itself seems to have shaken off that news. As we know, they've got that use case for their margin trading there as well. The second thing I wanted to touch on was the coins they're going to list. So the war for the customers in the US is heating up, and altcoins at the moment, they're really taking a pounding, but I think that is going to turn at some stage, particularly once we know which ones are going to be listed. We saw a jump in a few of these already. Up for grabs here, which ones that they're exploring to be listed. We also saw Coinbase come out, again, wanting to list more coins. Now, I'm not going to mention which one in particular, but I have added a couple of these to my portfolio this week. Members know which ones they are, starting to think long term, which projects have the good fundamentals, which are going to be listed on the biggest exchanges for that next retail wave. At a time when a lot of exchanges are delisting coins, that makes a huge difference where that new retail money is going to be able to flow in. Now, T0 security token exchange here, that is trading publicly as of August 12th. So a few of you are interested, head over there and get registered if you are able to, if you're interested in getting exposure to that T0 STO token. I own a couple of STO projects. Really enjoyed that interview we did with Sasha from We Own. But I think, again, another little industry, a little segment of your portfolio that you want to have some exposure to is that STO space. Ethereum Enterprise Alliance are launching their mainnet initiative, so speeding up the ability and the collaboration with big companies and getting them to work on the Ethereum mainnet. So originally we saw a lot of experimentation on forks, private chains of Ethereum, but like the internet, we want everyone working on that public chain and becoming familiar with the scaling solutions, the layer 2 solutions, so we can get that interoperability. We know Microsoft's there, really big household names building on Ethereum. I think they've got a big head start on a lot of the competition. Now, into the Bitcoin news, and Fidelity has joined Blockstream's new institutional mining service. So big giants teaming up. Bitcoin just seems to be going from strength to strength behind the scenes here, like a game of chess with Fidelity, teaming up. And one of the reasons that I think is going on behind the scenes here, I've said this before, I think ETFs and investment products are going to need freshly mined Bitcoins, and they're becoming more scarce in May next year after the halving. They don't want coins that have a history. Now, this gets into a debate around fungibility. Are all two Bitcoins the same? If one's got a history that was possibly on the darknet, they're not going to risk that. I think they're going to have to buy up a lot of the new coins from miners as well. That's something that I'll keep you guys up to date with. Now, that hash rate did hit a record high, reporting 100,000 new miners going online. I'm not sure about that number, because a lot of the ASICs, the miners, have become far more powerful and efficient. So just because that hash rate is growing, I don't know if it directly correlates to heaps of new people mining necessarily, other than just individual rigs and these farms increasing their hash power, their mining power there. Now, before we get into the technical analysis, I want to mention the survey results, sentiment results I often like to do on Twitter. So have your friends start asking about Bitcoin yet? And this was a question that I was expecting a big no to. We just haven't got there yet. And we're at 12,000, 11,000. In Australia, we have actually touched 19,000, but we haven't really had that yet. It's nothing like 2017 with the mania and people sharing their affiliate links with their friends. So just be mindful of where we are in this cycle, and I see this playing out perfectly. When we pass 20,000 again, your friends are going to start asking you about it. So it's crazy to watch this unfold in slow motion, and for some of you, this will be the first time you've been through that complete cycle, and your friends will be asking you how to buy Bitcoin when we go through all-time highs again. Just remember, we've got our free learning resources over at nuggetsnews.com.au now for those that are getting started. But let's get into the technical analysis. So this is the 3-day chart on Coinbase. I want to start here because it shows it best. From the lows, we've generally had increasing volume, a huge move, and now we're just sort of consolidating a bit of a flag. Now, it's not perfect because it's probably retraced further than we would have liked. There's a fair bit of chop here, and the volume has been higher than we would have liked. Ideally, we'd want declining volume and lower volume than what we've seen. So that's why we've had so much chop and we've been range bound. So let's zoom in a little bit. Heading over to Binance, where recently I have liked their volume, particularly for day trading and scalping more. Now, last week we were completing that Adam and Eve pattern. You guys know I've been speaking about this as the double bottom, and that gives us a target in the mid 12s. So we didn't quite get there. 12,360 I think we got to before we started to chop around and form this flag. on this on the lower time frames. So this was the pattern that everyone was watching. We had a few little fake outs and back and forwards, but again, this is a fractal of what we just spoke about. The volume here was far too high for what we'd like to see if this was just a calm, collected, gathering its momentum before the next leg higher. Now, initially I was hoping, when we had the China news coming out, I really thought that, hey, this could push us higher. But as we got towards the end of this, look, I did post for members that, look, this is not looking great. There's been more sell volume. There's been a few opportunities here when I thought Bitcoin could have broke out if it was going to, and it didn't. So then we had this big move down. But a lot of panic, a lot of people being liquidated because everyone was margin long, expecting that leg higher. But let's zoom out. Let's not panic. In the scheme of things, this is still an uptrend. We didn't yet break that low that we set at around 11,200. So that's the next level we want to watch. The 50-day moving average here in green is coming into play. It's common to retest this breakout area of an Adam and Eve pattern. So anywhere around here, the 11,000 to 11,700, 11,800, this is that real cushion that we maybe want to see at least a bounce out of. And I'm quite happy for this to chop around and form a solid base, because I just see everything lining up so bullish for that next cycle. So a lot of people still talking about 7,000, 8,000. Is this all just a rally in a bull trap in a bear market and we're heading back to 3,000? I certainly don't see that as the case yet at all. So look, we got a bit of a push up there. We're still holding that level. That would tell us to chop around to about August 23rd if our time cycles hold true. But let's just see what happens here. Take it one day at a time. I'll do daily updates for our members. I hope you guys have enjoyed that. Smash the like button. Subscribe if you haven't already. Share these videos around, and we'll talk again soon. Cheers.